let me take the conversation forward. And joining us today is Ramesh Swaminathan from Lupin to talk about the semaglutide opportunity. Ramesh, great to have you on ET now. Tell me, with semaglutide expected to be one of the most significant opportunities in the GLP-1 category globally, how is it that you at Lupin are preparing for its day one launch?
Indeed, this is a very important launch from an India perspective, and certainly from a Lupin perspective itself. As you would appreciate, India is the diabetes capital of the world, with more than 100 million people who would be patients, of which at least 50 million would potentially be obese, and a further 125 million people who are pre-diabetes. So clearly, that gives you a size, the good idea about the size of the market. It's about 23,000 crores right now. The last 3 months, thanks to, in fact, I would say a lot of advertisements relating to GLP-1 and the benefits coming from that and the like, the market has actually expanded. It's grown by 15.7% and the like. Whilst if you knock off the impact of just GLP-1, it'd be about 7.8% to 7.9%. So clearly, GLP-1 is going to make a difference. People are expecting it to be a big one, to be a very successful launch. And we at Lupin, being a dominant player in the anti-diabetic space, are pretty excited about it. As you'd be aware, we are amongst the top 3 players when it comes to this therapy area. So we believe that we would do extremely well out here.
Ramesh, price sensitivity remains the key thing for the Indian markets there. How are you pricing the entire drug for the Indian market? And in the process, how are you looking at sustainable margins as well as continuous investment into innovation?
Clearly, you'd appreciate it's a pretty large market, and it's of course a price-sensitive market. I do expect prices to come down, so essentially I would say it's anywhere between 3,000 to 5,000 rupees over time. There are more than 30, 40 players who would potentially be entering this market, and therefore it is going to be a pretty competitive market. And when the intensity of competition is as high as that, you would certainly expect the prices to come down. Yeah, but the other thing which I would certainly stress here is the fact that it's not really going to be GLP-1s. You have, in fact, a host of other innovation-led products which are in the making over time. There are more than 30, 40 molecules which are being experimented on, developed in other parts of the globe. Also, we are speaking about actually dual agonists. You're talking about triple agonists and the like. So clearly, this is a market and a product which is here to stay.
Right. So Ramesh, from a strategic standpoint, what investments have already gone into Lupin semaglutide manufacturing readiness? Also the supply chain and, of course, commercialization to try and ensure that you're well positioned when the opportunity opens up in India?
As could be expected from any big launch, we would be focusing on, in fact, supply chain metrics and the like as well. And clearly, the preparedness level in this case is extremely high. So we are confident of actually making a good impact and, of course, drawing up a pretty decent market share over time.
Ramesh, biosimilars require higher investments, but they have a longer product life cycles there. So what is your view on this market as far as growth is concerned, and what is Lupin doing in this market?
We are pretty bullish about, in fact, biosimilars, and especially when it comes to, in fact, the American market. It is at a point where, it is at an inflection point, the same point that generics was in 1994. Hatch-Waxman Act was launched it was actually enacted in 1984, but 94 is when the generics really took off. So I would imagine biosimilars is actually in a similar stage. Clearly, because the fact that the regulatory framework associated with this has undergone a change. Interchangeability is in. The private labels are certainly possible. And most importantly, the regulatory pathway in terms of they working on accepting biomarkers instead of, in fact, clinical phase 3 studies, clinical trials, for a lot of the products. That would actually mark the entry of a lot of biosimilars in the market. And clearly, I think this market is set to take off.
Ramesh, but globally, pharma is moving toward complex and differentiated therapies, right? Your peptides, GLP-1s, biosimilars, and complex injectables. From a CFO lens, how does this transition change the economics of growth compared to, say, traditional generics? And how strategic is this for Lupin?
Over the last several years, we have been focusing on, in fact, more complex products. So we have always found, in fact, in recent times, the oral solid dosage market is intensely competed for. There's a lot of volatility associated with that. Clearly, there's a big upside on launch and thereafter a continuous downside. But when you come to, in fact, more complex stuff, which is really the respiratory space, the complex injectable space, the biosimilar space, and the like, the intensity of competition is going to be lower. The mere drug device combination actually ensures that there are enough moats out there to protect players who focus on this therapy area. And we have been doing exactly that over the last 5-6 years. A huge chunk of, in fact, the R&D expenditure that we incur is essentially for the more complex stuff. And that focus will continue going forward as well.
Ramesh, as you look ahead, which are the products or which are the launches which you think will be key drivers of growth for Lupin both in India and the US, and how are you prioritizing your resources to ensure strong commercial execution?
As you know, we've actually entered etanercept some time ago when it came in Europe and Japan. We also have recent approval for PEG-CSF. Ranibizumab has been approved in certain parts, including Europe. And we believe that we have, in fact, a pipeline going for a host of other drugs, which will keep our competitive intensity pretty high.
Right. Ramesh, how is Lupin's balancing its investments between high-value complex generics, a specialty business, and of course generics as well to try and strengthen your competitive positioning in the US market?
So clearly, we believe that we would, will have to be over time a specialty player. And in recent times, we have actually relied on acquisitions to get there. For instance, bought into Pharma, which is in the ophthalmology space in Europe. And clearly, that's a foray into specialty, really. We believe that over time, we will transition to a lot more specialty, as could be expected of, in fact, a serious player in this industry.
Right. Ramesh, great to have you today on ET Now. Thanks for joining in on this very special show and taking the time out. Okay, on that note, let's take a very quick break. Be right back. We'll continue tracking markets on the other side.